All right, let's just jump right in. What if I told you a major global stock market didn't just go up last year? I mean, it went up by a number so big, it sounds almost made up. We're not talking 10%, not 30%, not even close. The story behind this is absolutely wild, so let's get into it.
83%. Just let that number sink in. 83%. In 1 year, South Korea's stock market just exploded. Now, when you see a number like that, your brain immediately asks one big question, right? What now? I mean, think about it. After a rocket ship ride like that, what's the play? Do you pile in, hoping to catch the wave? Or do you run for the hills, convinced a crash is coming? It's a tough call. Or maybe there's another way to look at this whole thing. So picture this. The year is 2025, and the South Korean market is just white hot, a total inferno. And look, before we can even begin to figure out what to do next, we've got to understand what lit the fuse in the first place. Okay, so what was the secret sauce behind that 83% explosion? Well, it wasn't some random fluke. It was actually two massive, separate things coming together at the perfect time. First, you had the part everyone was talking about, the global hype around AI and semiconductors. That, of course, was a huge tailwind for giants like Samsung and SK Hynix. Easy enough to understand. But then there was the other story, the one bubbling under the surface, and frankly, the one that's way more interesting for us as investors. And that was a massive, game-changing overhaul of how Korean companies are run, one that finally put shareholders first. So, with these two huge forces at play, how does a smart investor even begin to navigate this? Well, it's not by chasing the AI hype. It's about having a rock-solid, disciplined process, the kind the pros use, and they have a really clear goal: finding investments that can double in 5 years. It all starts with something called the absolute return mindset. And look, that might sound fancy, but it's super simple. It just means you tune out all the noise. You stop worrying about what the Kospi index is doing. You stop caring what other investors are buying. You just look at a single company and ask one simple question: is this a good investment, all by itself? It completely changes how you see things. And here's the key. There's a very specific target. Before you even think about hitting the buy button, you have to be able to make a rock-solid case for how this stock can give you at least a 15% return every single year for 5 years straight. And, do the math on that. That's basically what it takes to double your money. So, how does a stock actually double? It's not magic, it's just math. There are really only two main paths. Path 1, the company's profits double, and people are willing to pay the same price for those profits. Simple. Path 2, the profits stay the same, but the market's opinion of the company changes. People are suddenly willing to pay twice as much for the same amount of profit. That's a valuation double. Or, a bit of both works just fine too. Okay, this is where the story gets really, really interesting. Because the investors who nailed this South Korean call, they didn't just stumble upon cheap stocks. No, they actually rolled up their sleeves and helped create the value. They turned these cheap stocks into gold. And this, right here, is a total game changer. This wasn't about sitting back and picking stocks. This was about becoming an activist. They looked at the Korean market, saw a system that was fundamentally broken for shareholders, and they didn't just complain about it. They pushed for a fix. This quote really just sums it all up, doesn't it? They realized that just buying a stock is, well, it's just an opinion. But by actively advocating for change, they could actually influence the result. It's like they didn't just bet on a horse to win the race. They got down in the stables and helped train it. And they didn't do this behind closed doors. They put out a public plan with 6 specific, powerful recommendations. Things like stopping unfair mergers, making sure buybacks actually benefit shareholders by canceling the shares, and, this is the big one, legally requiring company directors to act in the best interest of all shareholders, not just the insiders. And the result? It was huge. Their ideas got so much public support that the government actually made these reforms a key part of its political campaign. Think about that. They literally helped change the laws of the country, which unlocked a ton of value that had been trapped for decades. All right, so let's fast forward. The market is up 83%. Your big bet paid off in a massive way. You're a genius. So what do you do now? Well, this is where the difference between a good investor and a great investor really becomes clear. Look, the easy move, the thing your emotions are screaming at you to do, is to just sit back, pop the champagne, and let your winners ride. But the smart move, the disciplined move, is to go all the way back to the beginning. You have to ask that same exact question again. Okay, at this new, much higher price, does this stock still have a convincing case to double in the next 5 years? And here's the proof of what they did. They didn't just talk about it. They trimmed their position in South Korea all the way from a peak of 20% down to 12%. They weren't greedy, they took their profits.
And they were really smart about what they sold. They sold the stuff that had gone up the most, like the brokerage stocks. They sold perfectly fine companies that just didn't have as much upside left from the reforms. And this is the most important part. They took that cash and put it to work somewhere else, in places like China and Thailand, where they found new companies that fit their double in 5 years framework.
So we've been through this whole incredible story, the crazy rally, the activism, the smart profit taking. If there's just one thing, one single idea to burn into your brain from all of this, what would it be?
This chart says it all, really. It breaks down 16 years of their performance. That bar on the left, that's the country effect. That's how much money they made by just being in the right place at the right time. And you can see, it's basically nothing. Flat. Now look at the bar on the right. That's the stock selection effect. That's where all the outperformance came from. It wasn't about picking the right country. It was about picking the right stocks.
And that's the big lesson here. Real long-term investing success isn't about having a crystal ball to predict the next hot country. It's about having a process, a repeatable, disciplined system for finding great companies that are on sale, wherever in the world they happen to be.
So that brings us right back to you. The question isn't what's going to happen to the Korean market next. That's the wrong question. The real question, the one this whole story teaches us to ask, is this. Forget the noise, forget the headlines. What's the next company you can find that has a real, convincing story for how it could double in the next 5 years?